Thank you for attending. Let me give you a quick rundown on Western uranium vanadium. You've already heard from Fabi how she talks about the uranium market. We don't need to talk about that. Obviously, it's a good market. Uranium stocks are proposed to go up considerably. You can take a look at our chart. We've got it in here. Over the last 2 weeks, we've gone up about $1. The normal cautionary statements, need to read that. But going to our investment summary page, the key about this company is we have existing operating uranium vanadium mines. We have both uranium and vanadium in the same mines, which gives us a cost advantage over most uranium producers, since we produce two commodities when we mine and when we process the product out of the mines. We've got 4 permitted mines, all of which are in Colorado. In production now with miners working 7 days a week, 12 hours a day. Our capital structure, we've got a very tight capital structure. As you can see, we have about 50 million shares outstanding at the current time. Fully diluted, about 63 million. Market cap of about 117 million. Our price a couple of days ago was $2.35 Canadian. And you can see the chart, like many of the producers or the would-be producers, we've taken and had the run-up of our stock price because of obviously the increase in uranium prices. That's helped us as well as others. We think this is going to continue. As Fabi said, we think the uranium bull market is just starting, and we're a little over $100 spot price. That could well go considerably higher. We have no contracts. We've not contracted for any of our production. We will be in full production in 26, producing initially about 1 million to 1.5 million pounds uranium and about 6 million pounds of vanadium annually. We'll move that up to about 3 million pounds, probably by about 28. So we're not going to significantly impact the total demand for uranium simply with our 2 to 3 million pounds. But we think we'll have prices when we contract with utilities substantially higher than they are today. We started our mining operations and did our economics at $50 uranium and about $7 vanadium. Vanadium has fallen, it's about $6 now, but the uranium price is well over double that. We'll have a PEA out this summer that reflects the cost of production through our new processing plant. That plant's in the stages now of permitting. It's going to be built close to Green River, Utah. It'll be ready for production in mid-26. The mines will be stockpiling ore. We're already stockpiling ore at the mine site now. In 25, we'll start delivering the ore to the mill site for the startup in mid-26. You take a look, we've also got another mine. It's in one of our presentations here further on. It's about 4 miles away from the mill site. It's got a technical report that shows about 6 million pounds with additional drilling, which is not reported yet. We probably have about 10 million pounds in that deposit. That will be permitted and ready for production in mid-26 along with the Sunday Mine Complex to increase our production to about 2 million pounds from those 2 mines. The processing plant will be built in stages. It'll be built to process our ore to start with, but it'll be available for additional companies to bring their ore. We've been contacted by a number of the juniors that have properties in the area, and certainly we'll have capacity to process their ore when they start their mines. That's the other thing. I think Fabi mentioned that it's difficult to permit mines, and it certainly is. It takes years to do it. We've got 4 mines that have been permitted. They were owned by Denison and produced back in 2006 and 7. The mines are fully developed, ready for full production, and that's what we're aiming for in the near term. You can see some pictures in here as you go through our presentation of the mining operation. Number of slides about the uranium market. I think you've all covered that, you know that. The vanadium, a little bit about that. Uranium price, obviously. Our resource table. Our resources are in the U.S., all in the states of Colorado and Utah. The San Rafael project. This is the Sunday Mine Complex, pictures of the surface facilities, some of the equipment. We've been buying mining equipment for the last 2 years, gearing up for full production. Not only is mining equipment difficult to get, but it's very difficult to find the labor. In the United States, the uranium industry has been shut down for years, but we've been able to hire people coming out of the gold fields of Nevada. These are small underground mines, very safe working conditions. We've been able to hire miners, but it takes time to train them in a little bit different technology than the big mines. But we've been successful at that, and that'll be a problem for any startups. Finding the equipment, finding the miners to get into production is going to be a challenge, not just in our area, but probably around the world. More pictures of the portals. This is some pictures of the face where the ore is, the high-grade uranium, the vanadium. We're doing underground drilling rather than drilling from the surface. We've got an underground drill that'll drill out 3,000 feet. So we're defining additional ore in the Sunday mine with our underground drilling. So that's just a quick rundown of where the company is. I'd be happy to answer any question in a couple of minutes. Yes. Yeah, the White Mesa Mill, actually, I was with the company that built the White Mesa Mill. That's 2,000 tons a day. The new mill is going to be 1,500 tons a day, okay, slightly smaller. Without the grades of ore we have, it'll produce about 3 million pounds. The Sunday mine is about half of that production. We add the San Rafael, that'll add another 1 million pounds. We probably have another 500,000 pounds for additional mines. That's a good question about selling some of the ore stockpiled. Right now, there are no operating uranium mills in the United States. There's nowhere to sell it. Energy Fuels has the potentially operating mill, the blanding mill, the White Mesa Mill. They announced that they might have a buying schedule. We're probably the only company in the whole area that could sell them any ore. There's just nothing developed or actually in production. It depends on what their buying schedule is, whether we'll sell the ore or just save it. As an example, there's in one month of mining, we weren't intending to mine the ore. We produced $6 million worth of uranium, and that was just in development. We've got a lot of value, and if it's worth selling it, we might do that. But you make far more money if you put it through your own processing plant. So it'll be ready in 26. Maybe Energy Fuels will turn their mill on and buy some more. We'll look at the economics of that. I might mention we do have a small cash flow from some oil and gas royalties. We're not an oil and gas company, but one of our uranium properties does have oil and gas. So we have a continuing stream of about $500,000 to $750,000 royalty from our oil and gas royalty. But that is not significant compared to our royalties or our stream from production of uranium. Yeah. The question is, what are our risks to meeting our financial targets? Obviously, we've got about $10 million in the bank. We're well cashed up now. There was an analyst that just initiated coverage on us last week. He estimates the capital cost to fully develop the processing plant is $85 million. So he's gone through some details. So obviously, we've got some financial risk. We'll have to raise more money. But in this market, we don't think that is a substantial risk, because certainly we've already talked to customers that are willing to sign some substantially higher price contracts. But financing that $85 million, we don't think is a problem, but it's always potentially a risk. The mining risk, obviously, we know the ore is there. We're developing the ore from the Sunday mine, so we don't have much of a mining risk, but that would probably be our biggest risk, is the uranium price needs to stay, obviously not this high, but if the uranium price dropped back down into the 20s, nobody makes money at $20, even Cameco. So that might be a small risk, but we don't see that, happening in the near future. Thank you very much.